Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 26th day of September 2014, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we've seen in this market. Tremendous downside pressure continues pretty much across the board in the precious metals. We do have silver trading higher today with the rest of the complex lower. First to gold, 12.1761 current print. Now it has had a high of 12.2860 and a low of 12.1270. As far as silver goes, it is trading higher on the day, up about 14 cents. Current print, as you can see on the screen, 1762. Now, that is with a low of 1741 and a high of 1771. On top of that, we have the Standard & Poor's up over 16 points at 1982.85. Dow Jones Industrial Average up 167 points at 17,113. So we've had a dramatic continuation in terms of the climb in the Standard & Poor's as well as the Dow Jones Industrial. So traders, just to give you an idea of the kind of range that we saw this week in the market, I've gone ahead and pulled up a weekly chart. And as you can see, we've had quite a dynamic range. In terms of this week, we have had it opened at about 12.16. Looks like it's going to close at around 12.17. So really unchanged to about $1 higher. Now, it did hit a high of 12.3545. But the low it hit was 12.0710, so quite a dynamic range and closing pretty much unchanged on the week. So the first thing I want to look at is the low that we got in the market. And I've just got this, it's a horizontal line. It's not Fibonacci based. It's not really based on anything, but I'm setting it to the low. And the reason that I want to do that this morning is then by compressing this chart, if we can look back in time to see, is there any other point in which we have seen this price point to try to make sense on a technical basis of our current status in gold. Now, when we do that, you can see this one particular top right in here. And this top, of course, occurred at the end of 2009. The market had really been trading dramatically higher. You can see this is the point it hits about 900 and comes back down. This at around 1200. Let's go ahead and put in our $1,000 mark because that was pretty critical or important. We had this set of double tops. But once this market really took off after hitting 1,000, it trades up to this record top. I believe this record top was around 1230. So roughly in this area, we see that we then found some resistance in the market from 1200 and takes it back down to just about 1050 in the market when we look at the retracement that we had from this particular high here all the way down. Now, when we look across the board, we then see there's really no other space or price points that it hits until we really get to this double bottom. This, of course, being 1180 here and 1180 here. And when we look at it on a compressed chart like this, the one thing that really stands out is we're not that far away. Although we're trading at 12.17, we're only about $37. And in the big picture of price change in gold, that's really not that far away from these bottoms at 1180. Now, will we drift lower? Well, I think that there's a distinct possibility that we could. And as I said on many occasions, it's really all about the dollar. And this is exactly what I'm talking about, traders. It's the fact that we've got a runaway freight train right now as this dollar continues to press to higher and higher ground. Now, you can see by the activity, this being a daily chart, we might convert it into weekly, but I'm certainly going to compress it. We have really broken out of any kind of range whatsoever. Now, we did have the market go into this price point, and let's go ahead and compress that, And what we talked about last week and actually a couple of weeks ago was the fact that we had a couple of tops, and we've been one by one methodically taking these tops out as this market ran to new ground. And then we had this top being right around 85. We took that out this week. So where do we really need to go to see at any point in time in which we have traded to this level in terms of strength in the dollar? And really to see that, we did have to go ahead and compress our chart to a weekly chart. These are those tops that we have exceeded. We've pretty much exceeded everything except this is the beginning of 2010. This is approximately July of 2010. And we hit this record top here at around, 89 and change. So we're nowhere near that, but we are certainly above any tops prior to that. So what we're looking at when we're looking at this dollar index here is a record top that we really haven't seen for about 4 years. So what are we looking at, and what is my current determination? Well, the one thing I can say is the point in which it's resting at, on a technical basis at least, doesn't really have any correlation. As you could see when we went and looked at other price points in the market, there's really no dramatic top or bottom that matches our current trading level at around 12.17. The closest that we can get, if anything, in terms of where we see this market, was a series of double bottoms, and then that one point in which we saw the market rise. Again, that was a few years ago. Now, the one thing that we aren't noticing about the activity, again, we're looking at a simple daily chart. This daily chart, we can absolutely see the defined break that we saw once it broke below this long-standing support line. My sense is we've got these alternating candles. The market is consolidating. We've seen it consolidate before. And typically when you see this market consolidating, it is attempting to build a base. And my sense is that it will attempt to build a base and then break lower for one last time to really match this price point at around $11.80 per ounce. So traders, what about silver? Well, I've got a daily chart up here. It's highly compressed because what we're looking at, in the same way that we looked at gold, we're looking at this current low right in here. 1762's had a low of 1741, simply drawing a horizontal line across. And on this particular chart and in this particular market, meaning silver, we do have some historical data that shows us that at this point we have seen a supportive action within silver at around 1720, I believe was the mark. 1730 right in there. We've hit that low of about 1740. Could we find support in this particular area or price point within silver? Well, the real issue right now, as far as I'm concerned, is that we have a dynamically strong equities market and a strong dollar. And with that equities markets, we should see some residual effect within the industrial precious metal complex. Now, we didn't see it in platinum nor palladium. They're running on an independent status pretty much. But today we did see a silver move in unison, although slightly, but move to the upside, counter trend to the other precious metals in which we're seeing somewhat of a rise. So we'll have to see if we can see some sort of a bounce off of this particular price point to higher pricing over next week. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.